Hello everyone, welcome to our Zoom session today. Today our topic will be zero capital gains tax. Is it possible for your property sale? Okay, let's have a look. Before we go to the main content, a quick declaration. The information provided is for general guidance only and should not be considered as personalized tax advice. We recommend consulting a qualified tax advisor or planner before implementing any tax planning strategies. Okay, now let's go to have a quick look. So strategies to reduce CGT to zero. Okay, so basically we want to have a look at on what occasions you can reduce your capital gains tax to zero. Number one, main residence exemption. This one is more commonly known. So basically, once the property is our main residence, we do receive full capital gains tax exemption. Okay. Number two, 6-year rule. This is actually should be a very popular strategy. Okay, but it's not commonly known. And unfortunately, every single year we do receive quite a few clients who already sold their property, and then when they came to us to prepare their tax return, they suddenly realized, okay, they could have utilized this strategy from the very beginning when they purchased that property, then they didn't have to pay capital gains tax. Yeah, so basically, if the property was your main residence and later rented out, it may still qualify for full exemption for up to 6 years. So the key here is you need to use the property as your main residence from the very beginning after you purchase property. Then you can rent it out for 6 years. So before the 6 years expire, you could potentially move back again, treat it as your main residence again. Then you rent it out. The 6 year will kickstart again. Okay, so this is a very important strategy if you don't know about it. Or if you're watching this video and then you know one of your friends or relatives, if they're selling properties, let them know. Okay, actually before selling, even before purchase, you know about this one, you know how to utilize it. Of course, there are underlying eligibility requirements. You might want to talk to us, yeah, to understand more details on how to utilize this 6-year rule. Okay, next one, 50% CGT discount. This one, I guess, is more commonly known uh, to taxpayers. So basically, if you own a property for more than 12 months, you can actually receive a 50% capital gains tax discount, yeah, in the calculation. But of course, as of now, it's only applicable to Australian taxpayers, okay, tax residents. So if in case you're a foreign resident, this is not applicable to you. Also, the main residence exemption, what we have mentioned before, okay, it's not applicable to foreign taxpayers, okay, foreign residents. All right, also, next one, small business concession. So there are a few, okay. I guess the most commonly used is the 15-year full exemption. Yeah, you could potentially receive the full exemption. And there's also could potentially be another 50% discount, okay, on the original 50%. So for a property that's actively used for a small business, you could potentially only pay 25%. That will be taxable, yeah, from the real actual capital gain. Um, yeah, there are other benefits for small businesses. Yeah, if you're interested, you can talk to us. Then number five, capital losses and income planning. So that this is actually quite important. Yeah, that's we want to reiterate this again. Of course, when you have a property that's kept in family trust, you could potentially pick and choose a family member who already have capital loss, okay, to absorb the capital gain, or potentially if even if the property is attached to your personal name, then you had passed on capital loss, then you can use it. Okay, so offset gains with past losses or sell in a low income year to reduce or eliminate CGT. Low income year is quite important. Yeah, we had one experience a few years back. A client came to us and for whatever reason, he actually wanted to sell 3 properties. Yeah, in 1 year. I think it was if he came to us in April, and then he wanted to sell 3 properties before June 30. Then of course we found out there was no cash flow issue. Yeah, there's no urgency for selling, and then he actually moved 2 property sales to the following year. Then as a result, saved 40K or 50K on capital gains tax. So that's an example that you need to choose a low income year to reduce or eliminate capital gains tax. All right. Of course, there are many other different structures yet you could potentially utilize for your property ownership. One part I didn't include in today's presentation, but I think I've mentioned before, maybe in some other recordings. Many people exclude a company structure as property owners because owner because there's no 50% capital gains tax discount when you have a property in a company structure. But a big advantage you also shouldn't forget when you pay capital gains tax income in a company structure, that tax after paid is not forever lost. Okay, because you can potentially still choose to pay the shareholders a dividend in the future and receive the tax refund as a dividend, as a franking credit refund in future years. So that could potentially reduce the capital gain to 0 on tax. All right. So if you're interested, maybe watch one of our other videos, how to reduce tax to 0% on investment or business income. All right. And then you might understand on the franking credit part. All right, a quick case study, focus on 6-year rule. So let's say the property was bought in 2012 for 400K, sold in 2024 for 650K. It was used as main residence from the very beginning, then rented out for 5 years right before the sales. Okay, then you can apply 6-year rule for this one and 50% discount. Result, $0 CGT, capital gains tax payable. Okay, so key takeaway here, legal strategies, tax planning strategies, accurate records, so that will bring you tax-free gain. All right. Okay, final tips and next steps. Very important, plan early and keep thorough records. Okay, exemptions and discounts require strict compliance with ATO rules. Then there are other eligibility requirements. So if you are going to sell a property, talk to us first. Yeah, we'll explore different directions to see whether it's possible. Before purchase, okay, actually very important, before you purchase your next property, talk to us because your future capital gain is actually important. Yeah, sometimes the planning point is actually before purchasing that property. All right. So very, very important, speak with a qualified advisor to tailor a strategy. Okay, an advisor or planner similar to us, someone specialized in property taxes. Okay. All right, quick introduction about myself and also our contact details. If you have any questions about this, any topics we mentioned in this session, send us an email, talk to us. Okay, so that should be everything. Thank you so much for attending our session today.